Welcome back to the channel, friends. Today we're going to do some TA on Bitcoin, Ethereum, EGLD, and Cardano. And one of the things that's really been interesting over the last few weeks that has taken Bitcoin to new highs for the year is BlackRock, Fidelity, ARK, WisdomTree, VanEck, Invesco, all these companies filing for their spot Bitcoin ETFs. Now, they've also all refiled, and the reason they've refiled is because the SEC told them that they need to have an SSA with a certified exchange. They needed to name a firm that's going to be their SSA. Now, an SSA is a firm that gives them a surveillance sharing agreement, which basically gives transparency on how the spot Bitcoin price is determined. The SEC wants oversight on that to maintain regulatory scrutiny to make sure that there is no market manipulation. That's what the SEC says. It seems to be a long-standing thing that they haven't had. But then again, I think there are other reasons that the SEC hasn't approved this. Otherwise, Grayscale probably would have already had one. And I don't know why this didn't come up before. But anyways, because of all of the work going on with the ETFs, Bitcoin has really seen a huge spike. And a lot of that has fallen over to altcoins. So when we look at the charts today, I want you to keep that in mind. When we go over the pump that we've seen, a lot of that has to do with this ETF. Which means that depending on the SEC's decision, we could be at a point where some of these things could drop again and we could have more volatility. We really don't know. But remember, out of 576 ETF filings that BlackRock has ever done throughout their career, there's only been one that's been rejected. And it's been quite a few years since that happened. So BlackRock basically has a 99.82% success rate getting ETFs approved by the SEC. They would very well not like to hurt that record. So it's unlikely that we see BlackRock coming in here with an expectation of not being approved, which is also very interesting. And the market, I don't think, has priced that in yet. So anyways, let's dive in knowing all this and take a look at the charts and see what we see. Okay, the first thing we're going to look at here is Bitcoin, of course. And I'm looking at the daily chart right now, and there's a couple of things I want to point out, all right? The first thing is this support level down here for 22.6 to 24K. We have had this support level for quite some time. We've been following this since, early January. And basically what's happened now is that we pumped up and we were in the golden pocket for a long time. And if you remember when we were down here back in January or February, if you were following me back then, remember what I told you. I said, I want to see us go into the golden pocket and I want to see us put in a lot of volume there for a few months. Well, we were in the golden pocket from March, April, May, June. We fell below a little bit, and now we pumped right above the golden pocket with all the ETF news. The ETF news really started mid-June, and that's when we saw the pump from around 25,000 all the way up to 30K, and we've been kind of holding that 30K level. So very, very telling that this big pump happened with the ETF news. It means that we could have still been trading in this 25,000 area, which is kind of interesting if you think about it. 25,000 at this point in time with everything going on in the economy is actually a pretty good level for Bitcoin. Now we have the ETFs coming in and we see that Bitcoin's going to enter a new phase of its life as an asset class. Once an ETF is approved, which it will be approved, I don't know exactly when, but I assume that the goal right now is to get an ETF approval before April of 2024 when we have the halving. So I think they want to make sure that when the flood of money goes into Bitcoin, it goes through BlackRock or it goes through Fidelity. These big companies want a piece of the pie. So in order for that to happen, they got to get their filings in. And I think we're going to see that with the halving, with the ETFs, with the additional use cases of Bitcoin that are coming in over time, we're going to continue to see this thing rise. That's my suspicion. But anyways, going back to the chart, what we see happening on the daily since that pump is that we have really been going above the 20 exponential moving average. You remember what I've told you so many times. When we have pumps, you want to see Bitcoin ride the 20 exponential moving average. This applies to every asset, okay? So we saw that with Bitcoin in the pump from early 2023, right? In January, when we went from around 17,000 up to about 23,000. Then we saw us go below the 20 exponential for a while until we pumped back up, and then we rode the 20 exponential into the golden pocket. We continued to go sideways where we fell below the 20 exponential for a short time. You can see all those little bearish cycles go below the 20. Well, right now on the daily, we are holding the 20 exponential. The 20 exponential is sitting at 29,700. So if you see Bitcoin go below 30K, not a big deal right now. We just don't want to go too far below 29.7. If we go far below it, you don't really want to go too much past 28.7. You want to get support on the golden pocket. So we have a lot of room for movement right now, which is really good, and we're holding a really good level. So for me, when I saw the price the other day drop down to around 30K, I did a spot buy. I restarted my DCA purchases because I'm like, you know what? I'm starting to suspect that as Bitcoin starts consolidating here, we could just as easily see a pump up to around 34, 35 as we could see a drop to around 28.9. I think the chances are equivalent in either direction. So the chart right now gives us a brand new support level to look at, which is 25.6K to 27K. That's like the bottom support level, right? There's going to be a ton of support in the entire golden pocket, which is from like 26,600 all the way up to 29,800. So there's a huge area of support below us, and this entire area for me is a buying zone. I have orders coming down as low as 25,000 right now. All my lower orders, I've canceled them. So 25,000 to 30,000 are where my Bitcoin orders sit for my continued accumulation. Now, what I want to also show you on the daily when we zoom out a bit is that we are putting in a very, very good uptrend, and we've been following that uptrend. You can see our bottom has really been our final red moving average, which is the 200 exponential. Sorry, so the 20 exponential is the one that we've been following. That's the blue. The 200 exponential is the red. That's the one where we've been getting the most support. So we just want to make sure we always stay above that 20, which we have been doing. So now what I want you to take a look at is where our next Fibonacci retracement levels are, all right? So this is when we zoom out a bit. These lines that you see, these colored lines, mark our Fibonacci retracements. And what you can see is in between this large area from 17,000 to 36,000, the golden pocket is the key trend reversal area. And we have not only gotten support there, we've traded there, we've now broken it. We're above that blue golden pocket area. So essentially what that means is our next resistance level by the Fibonacci retracement puts resistance at 36,500. Now, the reason I bring this up is because at this point, any little news about Bitcoin or any changes to the market, any people coming out to support it, any company that says they're buying Bitcoin, pretty much very little can happen now to trigger a move up to around 35, 36K. And I think no matter what, as we get closer to the halving, the hype from the halving alone is going to push us into this Fibonacci retracement level, which goes from 36,000 all the way up to 44,000. So my thought here is no matter what, by December, by January, towards the end of this year, within the next 4 or 5 months, I see us being between the $36,000 to $44,000 level, which means that anywhere below that is a good accumulation zone. And that's what I'm looking at. I also think that we're going to very possibly even be pushing towards 50K by the end of the year. I think it's a possibility because the way that this trend is moving now is showing me that we are restarting that bull cycle. Now, if anything happens where we have bad news, expect us to be trading in this area, which is anywhere from 30K to about 40K. That $10,000 range, I think, is going to be a huge trading zone because you saw before during the bull market, that was our bottom area. You usually flip your bottoms into resistance. Historically, that's what I think is going to happen. So this is our long-term Bitcoin view, okay? Now we're going to look a little bit shorter term for Bitcoin. We're going to go down to the 4-hour. So on the 4-hour chart, what you can see is we've been riding that 20 exponential moving average, and right now we're consolidating below it, which means if we see a drop right now, where I'm looking to accumulate is around 29,200. At that point, I think we wick down below and we continue moving, but right now, we could literally blast off from here at any time into the $32,000 to $35,000 range. I actually thought we would have done it sooner, but this additional volume, I don't mind it. There's nothing on the chart right now that's giving me pause, right? Which is somewhat interesting, right? The only thing is that we are riding, if you look at the RSI, right? Let's zoom into the RSI. This blue line in the middle is the 45 level. What you can see is we're like right at that 45 level. And when you're in a bullish cycle, this is usually when you start having your next pump up to start hitting the top of the RSI. That tells me that we could be very close to seeing a move to the upside taking us above 32K. That's why I did my 30K DCA purchase, because I was like, okay, I'm sensing that we're about to pump soon. So I want to make sure I get my DCA purchases in and I just get a little extra Bitcoin at these prices. If it drops, I'll buy more. You know what I mean? Like I'm always averaging out my cost basis and lowering it by buying when we drop. But on the way up, it becomes a little more tricky. You have to try to get the best prices even when you're moving up. So when we were in that 31K mark, I didn't buy anything. But then when we moved down back to 30 and I saw us like hit 29.8, that's when I bought. So I had an order sitting at 29.8. It triggered and great. I purchased some there. I made another spot buy at around 30. So either way, it gave me some additional Bitcoin. So try to do that. Pick the levels that you think are going to be beneficial to you. If you see Bitcoin being at 45, 50K by the end of the year, well, then that means that now's the time to pick your purchase points, right? So that's kind of what I'm doing. All right, so that's what I'm seeing with Bitcoin. I'm not seeing anything negative on the charts right now telling me that we're about to fall or anything like that. If anything, charts are looking bullish. Bad news can always take us down, but that's why we have our support levels. So just remember, support levels right now sit at around 25.6K to 27K for the bottom, but anywhere between 28,000 and 27,000 are good levels. If you can pick up Bitcoin there right now, I think you're pretty lucky because there is a chance that we may not even go back to those levels again in this next bull cycle, right? We might be seeing the moves where we go up, you consolidate, you take the step ladder up. Remember, when we have bull markets and we start moving into them, that's what we do. We pump, we consolidate. We pump, we consolidate. We pump, we consolidate. And that next pump is likely going to be coming sometime soon. So keep that in mind. Let's move on now to Ethereum. All right, so with Ethereum, there's a couple of ways I've been looking at this chart. One, Ethereum has been in a massive long-term consolidation now, right? Ethereum had a huge pump all the way up to 4,000 during the bull market, right? It actually hit around 4,700 when it peaked out. Came back down to the $1,000 mark, a little bit below that actually, like 892, huge drop. And since then, it's been moving on a really good upward phase, right? It pumped all the way to 2,000, dropped back down to 1,200, and now it's on this slow move up, which is a lot more sustainable. Now, in this, I have a few levels pointed out, right? Key levels, 2,000, 1,530, and 1,220. These are where our massive support zones sit and our resistance zone at 2,000. The fact that we are still inching our way back to that $2,000 level is pretty indicative. So I think what's going to happen with Ethereum is this, right? As long as it continues to get RSI support on 45, which it is, what we are likely going to see is when the next Bitcoin pump happens and Bitcoin moves up to 33, 34,000, I think we're going to see Ethereum break 2,000 and start trying to get support there. At that point in time, I think there's even a chance that you could see Ethereum pump a little further, and that's because a lot of people have been sleeping on Ethereum for now, right? With going to proof of stake and people not sure, is that going to affect the asset? Well, at the end of the day, the asset has been burning a lot, right? A lot of Ethereum is being burned with proof of stake now. Now, as this burning is happening and that supply level is reducing, you're getting into a position that when a bull market occurs again and things start moving, you might have a lot of people coming in to grab Ethereum, selling other altcoins, selling some Bitcoin, try to catch it on the way up. And I think it could definitely have a pump. And you'll probably see similar cycles that we're used to with Ethereum where it goes to like 2,000, 2,400, and then falls back down to 2,000. So there's going to be swing trading opportunity there. But overall, right now, the key with Ethereum remains the same. Break the 2,000 level, flip it into support. Nothing has really changed there. We're going to continue watching it. For ETH, I still have some orders sitting at around the 1,550 level. I always stay a little bit higher than my bottom targets. So I have some there just in case I can pick some up, but I haven't been doing any spot ETH buys right now. All right, so we're going to move on. Ethereum was fast today. We'll move on to EGLD. With EGLD, we are still sitting in our descending channel, not a bullish chart. The chart is not looking good, and it makes sense because with EGLD, you're in a position where all of DeFi and altcoins are really low right now. They've not had too much more industry participation. People are just down when it comes to their DeFi investments, and there's not a lot of new retail investors coming in. EGLD is plagued with that same exact problem as every other DeFi asset, and this is what happens in emerging industries. Either way, I still see a lot of future potential for EGLD because in terms of architecture and the builders on there and the work that they're doing and the platform, the UI, everything is top-notch. And as long as it stays that way and they continue to build on it, there's going to be a lot more functionality when people come in the next time. The last bull market, there was no DEX. There was no Myar wasn't the same as it is today. It wasn't even really as functional as xPortal is. So you see all of these applications that users can use at such a high level. The coding and the UI is at such a high level that there's a lot more value for the asset in the next bull market, right? So I think when we see that next big, huge dive into DeFi, we're going to see this thing go right back up to the $400, $500 mark, but it's going to take time. We don't know exactly when that is going to occur, but I am betting on it. Now I'm betting low. I bet low on all DeFi right now until we know what the SEC is going to do with their decisions, right? They have to figure out how they're going to legally allow exchanges in the United States to host these assets. And until we have an answer on that and what the SEC plans for DeFi, I can't allocate too much money to it. I'm not selling any of my eGold. I've held it all because I do see value. I do see a huge value proposition there, and I don't want to sell it. But what I do want to do is make sure that I'm buying the assets that I'm more confident in, which for me right now is Bitcoin. So right now, my allocation has been around 95% Bitcoin and 5% going into DeFi. And then a lot of that 5% goes into eGold more than Ethereum, but I still split that 5%. Well, as I start to see markets moving again and DeFi starts to get a little bit more bullish, I'm going to change that allocation. I might do 90% Bitcoin, 10% DeFi, or 60% Bitcoin, 40% DeFi. It really depends, but I have to start seeing us move out of this consolidation pattern. The key with eGold right now is what it was the last time I told you, so I'm not going to spend a ton of time on it. I'm looking below the $30 level all the way down to 25 as an accumulation zone. I've still been doing some spot buys. I did one the other day and picked some up at around 33.20 or 33.30, something like that. And I'm going to continue doing that when I see good opportunities. Like I saw a candle wick, and I think I was looking at the 4-hour chart, right? And we were at this level. I saw this candle come down and wick around 33.10 or 33.20. When it was back up to 33.30, I just did a spot buy while we were in that candle. Now, granted, is that the best choice? I don't know, right? We could still drop back down to around $30. And if we do, I already have orders between 25 and 30. So I'm ready for the bottom if we keep going. But when I have my DCA money ready and I know, okay, I need to purchase some, I need to allocate, that's when I do my purchases. And as long as I'm doing it in this descending channel, I'm happy because the time will come when we break out of it. And once we break out of this descending channel and start moving up again and really becoming bullish, I want to have a good allocation. But I'm not saying that there's no chance we drop below this, right? It is possible. The market could have another major black swan dump event. And if it does, well, then, things could fall another 50% from here. Who knows, right? We just don't know. Because of that, I'm splitting out my DCA purchases, right? I'm not buying bulk. I'm buying small over time. That way, if we do continue to drop for any reason, I'll be able to accumulate more, right? If we do pump, I'll be good because I've already accumulated a good amount. So either way, what you want to do is put yourself in a position that if things do drop, you know what you're going to do and you're not going to be stressed about it. It's why you don't want to go all in on one asset, right? You want to make sure that, hey, if DeFi falls, you have Bitcoin. You're covered. You're still doing well there and you can allocate more DeFi. So it just depends where you see the industry going. For me, I see eGold having long-term potential, so I'm doing long-term purchases. That's just the way it's done. Overall, until we see eGold break 40 and get support there, we're not really seeing much in terms of charts. We're just seeing us play out a long-term descending channel that is waiting for bullish activity. It's waiting for volume. It's waiting for the industry to turn. It's waiting for retail to come back. That's where eGold sits right now. Let's move on to Cardano. All right, so with Cardano, we see a very similar chart pattern that we do with eGold. You can see Cardano went above its descending channel for some time, and it actually did quite well until the SEC gave its remarks that Cardano and other DeFi assets, these are not regulated securities. They're not, they are securities. They're not commodities, all that stuff. We had a big, huge drop from around 37 cents all the way down to 20 cents. And now we had a pump back up and we're starting to move again. So I think a lot of what's happening with Cardano is very risky at the moment. I'm not purchasing Cardano at this level yet because I'm waiting to see what happens. If the SEC makes some more statements that are negative towards DeFi, guess what's going to happen to Cardano? It's likely going to dump again and go down to the 20 cent level or 18 cent level and get back into this descending channel. And if that happens, your boy's going to be buying some, right? I'd rather buy some there than buy some here. And you know what? I have plenty of Cardano, right? I've had my Cardano in staking for like 2 or 3 years. So I'm accumulating Cardano. I have a good amount of it. I don't need to be buying it where I feel it may be a little bit expensive. Now, in the long term, when DeFi booms again and we have an altcoin season, I think Cardano is going to go back up and touch its all-time highs again. So overall, in that long-term scenario, I think it's still a good investment. But I definitely think this EGLD Ethereum DeFi is an investment with significant risk. And if you're buying it, have your sell points. Know where you want to start taking profits. That's a mistake everyone made the last bull market. None of us are making it again. So what's going to happen this time is when you're making purchases here, know your sell targets, right? Sometimes if you sell early with like a 50% return, 25% return, whatever, it's great, right? If it drops again, you can pick more up. If you're going to hold it until the bull market and it hits all-time highs again, well, then make sure you sell there. Make sure you take some profits, give yourself a reward for buying early. And for right now, I want to get the best prices that I can. My cost basis for Cardano is still really low. I bought most of my Cardano at like 10 cents, so I'm still doing really good at Cardano. But what I want to do is keep that cost basis as low as I can. So whether I'm buying at 30 cents or 18 cents makes a big difference, right? That's a huge difference in the return on investment, my ROI over like a year or two when we go into that next bull cycle and we're hitting the major peaks of the market. Okay, so that's everything for Cardano. We've gone over everything today. The only thing I didn't really go over is Pepe. I haven't looked at the chart, to be honest with you. I don't really look at it much, even though I still hold some there. I told you, I'm holding this thing throughout the bull market now. And once it hits some massive, insane meme coin levels, I'm going to sell and take some profits and probably put it right into Bitcoin. So either way, I'm watching it, but not much on the charts. It's just kind of following everything else. So at the end of the day right now, know your accumulation targets, know what's going on in the news, follow what's happening with the SEC. Even if you're not in the United States, you want to know what's happening with the SEC because they control so much investment, like global investment that comes through the US stock market, that you want to know what's happening and you want to know what they're going to open the floodgates for. If they're going to be opening the floodgates for Bitcoin, well, you probably want to increase your Bitcoin allocation, right? Because then even if you're losing on some other assets, you're making money on the Bitcoin, right? And you can accumulate more of those, or you can, at least grow one side of your investment and balance your portfolio a bit. Remember, going all in on one thing is great in theory, right? Oh, you're part of a community, all this stuff. Yeah, that's cool and all. But at the end of the day, this is about your individual finances, right? That's what this is about. It's about you and your family. Be a little bit selfish, make the decisions that are going to be best for you. And for right now, that also means look at some stocks, look at mutual funds, see if there's anything you want to put in there just for safety, right? When the market when the bull market kicks off again, all those things are going to go up. And sometime having a little safety in a mutual fund or in, real estate and things like that, it's a good offset when you're doing riskier investments in crypto, which right now are risk-on investments, even though I consider Bitcoin to be like the least risky investment, even less so than real estate and dollars. But that's also just because of my understanding of Bitcoin and where I see it going, my vision of it, right? So I bet a lot on my vision of it. Anyways, that's everything for today. I hope you guys enjoyed this video. I hope it gave you a lot of info. Macroeconomic wise, I'm going to do another video for subscribers. I'll try to knock that out tomorrow or on Monday. We'll try to see. I want to just look at how commodities, futures, all these things are doing globally and how that may affect macroeconomically when we see the bull market, right? With Bitcoin, it's going to be a little bit correlated to the halving and after the halving into the ETF. But Bitcoin will start moving with the rest of the world if we start to see it going into a bull market. So in our subscriber video, we're going to go over some of those concepts. All right. Thank you all. I appreciate you joining me. Leave me some comments and stuff, and I'll catch y'all later. Peace.